Hi, hello there. Thank you for joining me for this video and this lesson. And I am happy to be here with you right now to share this knowledge with you because I know how much it will help you. So, thank you so much for joining me. And I'm honored that you are here watching this video. So, thank you again for joining me. Oh, oopsie, sorry about that. Okay, now, what is that? Okay, sorry about this, guys. Okay, all right, that is that. Now, that is a book from one of my mentors, Timothy Sykes. It's called the Penny Stock Guide, the Penny Stock Course, the complete Penny Stock Course by Jamil with the foreword of Timothy Sykes. I would love to thank my mentor. Those are my mentors. I'd also love to thank Robert Kiyosaki, who wrote the book Rich Dad, Poor Dad. And I would love to thank Matthew Creator, who wrote the book Rocket Stocks. So you saw the you saw the PDF that just that showed up there. That was definitely from my mentor Jamil, who wrote the book, the complete penny stock course with Timothy Sykes. Right in the forward, thank you to those guys. Now, I'm here to talk about this very much important chart that you can see right here. Is it possible to remove this screen? I don't know if you can move the screen. Okay, the screen is permanently there. Okay, now, um, this silver chart follows the rocket booster strategy. Now, again, if you want to learn more about the rocket booster strategy, please watch my previous videos and read my previous articles for you trading view members. You can read the articles and watch my previous videos where you will see the rocket booster strategy. Now, it's very easy, and silver is it's the best example I can give for the rocket booster strategy. If there was ever a perfect example for the listen, if there was ever a perfect example for the rocket booster strategy, silver is the perfect example. Okay, silver is the perfect example for the rocket booster strategy. Now, in this video, we're going to digest what is happening in the news, but I'm going to show you something. Now, this is called the resistance. Okay. Now, look at what's happened here. Okay. Now, again, shout out to Mike Maloney of Gold Silver. Mike Maloney, Rich Dad Advisor on commodities. Shout out to him for showing this pattern here, where he showed something like this. Where is that? Where is that? Ah, there it is. Okay, so he showed something like this. I think it was like how is that like? Was it from there? Yeah. Anyway, he, okay. All right. So you can now. So yeah, shout out to Mike Maloney for showing something like this. So basically, it comes out like that. It's like a trend line, okay? So it's like a breakout. I really don't understand what that means, but maybe for you chartists, you would understand what that means. Me personally, I don't even understand what it means. But from what I understand is this is the perfect example for what for the rocket booster strategy. Now again, no strategy is perfect, so you can see all these miscellaneous indicators appearing here. Now these are miscellaneous, they don't make any sense, so they only make sense when you understand crowd psychology. But out of all these, that's why you need to learn the rocket booster strategy, because out of all these indicators, this is the one that's the right one. This is the one that's true. No strategy in trading is perfect, and that's why I always put a disclaimer out after every video saying do your own research, because to be honestly totally honest with you, no strategy is perfect. Okay, so basically what's happening is that this is a 6 month momentum. Okay, that's what's happening on this chart. It's actually a 6 month momentum, and this momentum has happened before certain events. Okay, so there is going to be an event coming in the future that is going to rocket boost this chart. That's going to rocket boost this price. So be aware of that. And in the future, this will be the support if it ever crashes. And so that's why it is a very much a good buy. If it won't be the support, then it will be the safest entry. So this position is very much important. So there will be an announcement soon that is going to actually show the potential entry of this strategy. Now, sometimes in the rocket booster, there tends to be like a gap, okay, whereby it like gaps up in price, but it's not always that it gaps up in price. Sometimes it can be just a pure momentum. So we're going to look at the breaking news and the events that may have an impact on this price. So let's look at the breaking news. I think we still have time. We have about 10 minutes into the video, so we can look at the breaking news. I think let me just put on my 10 minutes timer. I'm just putting on my timer to make sure that I am in time. Okay, let's put 10 minutes. So it's going to ring in case I run out of time. So we have about 10 minutes into this presentation, and it's going to ring when my time is up. So, according to this, it's article by the writers. It says gold hits record high on bets for March start to Fed rate high cuts. Sorry. So, gold is over 3% so far for the week. Fed to move carefully on interest rates and silver hits 6 month high. So remember, like I was saying before, with this type of strategy, in fact, if you read the penny stock, the complete penny stock course by Jamil, written forward by Timothy Sykes, this is what we call the the support and resistance to momentum. Key support and resistance to momentum. Why? Because it shows 6 months to the momentum move. Okay. Now it happens before an event. All right. So this move happens before an event, and it is actually a safe bet. So we call this in the trading industry the safe bet, because it has passed a key resistance based on past behavior. All right. So these moves usually begin around July and June. Okay, and so that's what it means when it says a 6 month high. So we call these contract winners according to the complete penny stock course by Jamil and Timothy Sykes. Timothy Sykes would call this type of a chart pattern the contract winners. Gold prices rallied to all-time high on Friday after remarks from Federal Reserve Chair Jerome Powell increased traders' confidence. The US central bank had completed its monetary policy tightening and could cut rates starting March. All right, so basically, like I was saying in my previous videos, rates represent the value of the US dollar currency. Now, the US dollar currency holds about 70% of global trade, so it is very, very important to watch the US currency because it's the biggest traded currency around the world. So, if they cut rates, it means the value of the US dollar will go down. Excuse me, it means the value of the US dollar could go down. And when the value of the US dollar goes down, it means it's cheaper to borrow dollars. So it will be cheaper for businesses to borrow money from using the United States currency. So we can look at the price here. It says US gold futures also settled 1.6 higher at a record peak of $2,089 dollars 0.7 cents. So spot gold price in the USD per ounce. Okay, so you can kind of see the breakout here. According to this chart by Reuters, the breakout is at $2,050. So one thing you also need to understand is that there is a correlation between gold and silver. Gold and silver are actually defined as money since the beginning of time. Gold and silver has been money, and so you can see the breakout here, which is at $2,050. So it started in May. Now, so the spot gold price has beat its 6 month resistance right here, which started in May. Okay. Um. So okay. So it says markets added to bets of a March start to rate cuts and an interest rate of under 4% by the end of next year. So the Federal Reserve, once the Federal Reserve starts cutting rates, it means the US economy is not going to do well, and every economy that relies on the US dollar to run is also not going to do well. So by under 4% next year, the value to borrow the US dollar currency is actually the value to borrow, and the value to borrow the current the value to borrow the currency is going to drop, and the interest rate, that is the value of savings, is also going to drop. So think of it like this: people are saving US dollars to make 5% per year on their money, but next year they will only be making 4% on their money. So banks buy treasuries which are valued at 5%, right? And then they give savers 3% while pocketing 2%. So next year, savers are going to lose value on their interest by 4%. So another way to look at the interest rates, another way of looking at interest rates is think of interest rates as the value of saving your money. Okay, because when you save your money at the bank, uh, your savings rate is calculated using the US dollar central bank interest rates. So if your bank is giving you 3%, it means they have bought treasury yields which are paying at 5%. Okay, they have bought the treasury backed by the US currency, US treasury backed by the US currency, giving them 5%. And so the bank is only making 2% because if they're giving you 3% per year, it means they're only making 2% on the spread. So imagine uh, them borrowing on that 5%. Okay. So think of like, imagine an asset is only paying you 5% per year. Okay. Now, and you have fully collateralized on that debt, it means you're 100% all in. So using that treasury yield, you have borrowed, uh, you have printed more money, you have borrowed at exactly 5% at break even interest to buy an asset. And let's say, for example, in this case, the asset is real estate. So at 5% interest yield, you have borrowed real estate. And now that interest drops to 4%. It means you're now negative. And that's what causes banking crises. That's why I find like, I think it was in the previous article where we looked at the stock ticker of PAC. And in that previous article, it was more of like, you could have seen like job cuts. You say, no, 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 you know what? The job cuts are coming. Next year, there'll be job cuts in the banking industry. Why? Because the banks have over leveraged on their interest rates. Okay. And that's why they are saying, look, you can buy, when you buy gold, right? Because the interest rates of gold keep going up. Interest rates of gold keep going up, especially if you, on gold and silver, especially if you look at the chart, right? Because at the end of the day, you're looking at the chart. So it's more of like, there is like a battle going on between gold, silver, and treasury bonds, treasury yields. And the battle is which one is better. Okay, which one is better. Okay, and that is very much important to note and to remember. Okay, and so we have all these other awesome articles. Like I was saying before, yes, there is a battle between treasury yields and gold and silver. And right now, gold is beating treasury yields. Okay, and we also have the DXY for forex traders, which is crashing. You know. Okay, so that's the timer right there. So my 10 minutes are up. We could have gone deeper into these articles where, it's easy to teach. It's very easy to teach a strategy. I think the hard part is breaking it down using articles, because you need to know why you are buying something, right? It's called personal psychology. You need to know why you are buying something. So I can show you how to buy it, but it will never work for you because you don't know why we are buying these things. So that's why I'm doing this article breakdown so that I enter your personal psychology to help you understand why we are buying this, why we're using the rocket booster strategy. So I would love to thank you so much for watching this video, and do your own research before you trade. This is not financial advice. Do not buy what I tell you to buy. Do not sell what I tell you to sell. Thank you. Take care and bye bye.